Get ready because what I'm about to tell you could shake up the whole game. Trump's victory isn't just political, it changes everything, including the Federal Reserve's master plan. Before we dive in, remember, this is for entertainment only, but trust me, you'll see why. Today we're talking about Jay Powell, Chair of the Federal Reserve, and what he has to say, and spoiler alert, it's a lot of fluff. I promise you won't walk away any smarter, but you will be entertained, and that's what we're here for, right? So let's kick things off. It's no secret that President-elect Trump isn't a fan of Jay Powell, and we've got a short clip to prove it. It's just 15 seconds, but it's gold. The reporter asks Powell, "Trump's been pretty critical of your performance. Any thoughts on that?" And Powell, dodging like a pro, says, "I'm not going to get into anything political today."
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Now you have to see this next clip. Things are really heating up. The reporter drops a loaded question. President-elect Trump's advisors have suggested you should resign. If he asked, would you step down? And you've got to see Jay Powell's reaction. He's visibly irritated. He just fires back with that tense look on his face and says, "No." It's quick, but oh so satisfying to watch. You can almost feel the frustration coming off him.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Now this next clip, it's like tossing gasoline onto an already raging fire. The reporter asks the million-dollar question, do you believe the president has the power to fire you or, remove you from office? And let me tell you, Jay Powell's reaction is priceless. He's visibly upset and you can see the frustration boiling over as he says, "Not permitted under the law." He even repeats it as if to drive the point home. Not permitted under the law. You'll see exactly what I mean when you watch it. It's a moment that says it all without saying much.
I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
All right, now that we've had a little fun with those humorous clips, it's time to dive into something even more interesting. Powell basically playing the Fifth Amendment card on repeat. You'll see what I mean in just a second. So let's rewind to the Federal Reserve's September meeting, where they laid out their projections for cutting interest rates in 2024 and 2025. Fast forward to now, and the big question is, are those projections still valid? Now, this is where things get juicy. Why are they asking this? Well, as I mentioned yesterday, Trump's win throws a wrench into the Fed's plans, so naturally, they want to know if the old projections still hold up. And what does Powell do? He pleads the fifth or close enough, dodging with, "I wouldn't want to comment." Classic. Take a look for yourself.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting.
Now in this next clip, the tension keeps building. The question is simple. Back in September, you projected 4 interest rate cuts for 2025. Has that shifted now that Trump has won? And what does Powell do? Once again, he pulls his classic move, pleading the fifth. His response? Well, we didn't make any projections today, so I can't give you any projections for 2025. It's another dodge, plain and simple. You've got to love how he sidesteps it every time. Check it out for yourself.
Gina Smilik from the New York Times. Thanks for taking our question to Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook.
So you just saw Powell dodge that last one, right? Well, the reporter isn't giving up that easily. She follows up with, "I understand the Federal Reserve isn't formally making projections today, but what's your opinion on the 4 interest rate cuts in 2025? And what does Powell do? You guessed it, he pleads the fifth again. No opinion, no insight, just another dodge. It's like watching a masterclass in avoiding direct answers. You've got to see this one.
And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just.
All right, now we're getting to some clips where, finally, Powell actually says something. You'll see what I mean. The question comes up, how will the new administration affect the Federal Reserve's upcoming decisions? And here, Powell actually gives us a bit of insight. He says that in the short term, the new administration won't affect their decisions, but for 2025, they're not sure yet. They don't want to speculate because they don't know the details of Trump's policies or their potential impact, and you know what? For once, I'll give it to him. That's a fair answer. I mean, I can't fault him for not wanting to speculate on something so uncertain. So let's take a look.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Now, this next clip addresses a question we've all been asking. With so much positive economic data out there, savings are up, GDP is strong, and the stock market is rising. The big question is, why are you cutting interest rates? Powell's response? He acknowledges the strong economic data but points out that the labor market is cooled, and they don't want it to cool further. Plus, he mentions that inflation has dropped significantly and is now on a sustainable path to 2%. For once, we're getting a bit more detail from Powell, so take a look.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw a stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate, and we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%.
Now, this next clip addresses a question we've all been asking. With so much positive economic data out there, savings are up, GDP is strong, and the stock market is rising. The big question is, why are you cutting interest rates? Powell's response? He acknowledges the strong economic data but points out that the labor market is cooled, and they don't want it to cool further. Plus, he mentions that inflation has dropped significantly and is now on a sustainable path to 2%. For once, we're getting a bit more detail from Powell, so take a look.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is. but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is, it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down, the economy is still strong here, wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened.
Now I want to show you this last video clip. I thought that this was a good question. So the question is, would it be fair to get inflation even lower than the 2% target so that people can catch up? And Paul says no, low inflation can be a problem. So this just shows, this is how I'm interpreting it, that the Federal Reserve will not support deflation. They're not going to support falling prices. The Federal Reserve will pump the economy. They'll pump the stock market. They'll rescue any banks. They'll rescue any sectors that need saving. So this is what I've been telling everybody, that we are in the making of the great melt up the Fed. They will cut interest rates. They will print. Prices are not going down.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review.
Thanks for watching, and I hope you enjoyed this informational video. We will dive even deeper into what's happening with the markets, the Fed, and what it all means for the big picture. So if you haven't yet, make sure to subscribe so you don't miss any updates. Thanks so much for all your support, and stay tuned. There's a lot more to come. Take care.